there. So from now on I record any classes, right? So afterwards I'll post it so we would be able to go back and see what we're doing. And so
Okay, now.
yeah, man. So as per usual, we started on the goal chart, right? And then you'll see what else it and change the screen yet. So tonight don't really have anything in particular. I'll just go over once again what we just do, and just kind of give the sentiments or like the ideas of how we would look for we trades and stuff, right? So we but from now on, I guess they could probably use well my indicators our choice is the 200 moving average and the RSI, right? So I guess from now on, because I try to not to encourage others to use the indicators too much, to put too much reliance on it now, right? Simply because it is always lags, right? So the it is just kind of show what already happening. So what you really need is the price action, right? To be able to read the candlesticks and the market structure, to be able to then make determinations of what going on, and then you use the RSI and your indicators to confirm what you already know, right? So the RSI in particular, I want to kind of touch on that is that especially in this market that we're using here, what it would do is essentially give you somewhat of indications of where you might be in the market, right? So like right here in particular, so if you put a vertical line, um, really vertical, right? You would see that it line up with a low point right down here, and it also line up with a low on the gold chart here, right? So for things like these, if it is like these things could line up, you'll get a powerful move. Now, because it touched the 50 line, so how the RSI does work is think about it as guardrails, right? So we have I put mine to the 80, but it's between 70 and 20, right? Anything around 80% is overbought, meaning that the market due for a correction to sell, and anything closer down to like the 20 level, market due for a correction to buy. The 50 level is neutral. So if it traded above the 50 level here, then we could kind of keep looking for buys, and anything below that we could kind of look for sells, right? Make this the last thing you look at. No, we get this touch of the 50 line here, which come like it hits a low point. It also coincide with this little dip here, and then we get a push above. Now I was looking for more reaction off of this all-time high here, right? So I somewhat disappointed that I wasn't able to capture the move based on my trading strategy to get a nice entry up here, right? Because we was looking at it, we was anticipating it, but we didn't get it, right? Which is fine, there's trading, so you can't really this little area here. Missing out two. Like we trend line here. Alright, it was this little area here. I was hoping to get something on it. Alright, but we didn't. So what I would do is once again go over what we're looking for, and then we would line up what we could potentially be looking at for this week or what we're hoping for. Right. So once again, we started on the daily, right? So using the daily time frame as market structure, right? Oh my god, right? So using it as market structure. So we're trying to get overall gauge or view of what's happening, right? So the daily time frames, weekly, monthly. As we advance, we're going to higher. Um, right, right. So the as we go and get more advanced, um we would do like more monthlies, weeklies, and stuff to get different structures that be more long term trend, and there's more use those to find points of interest to buy and hold coins, right? That's ideally what that for. But once we advance a little more, we could hold trades longer. That's I was actually talking for myself here mostly. We will be able to hold trades for a longer period of time, right? Because most times when we do call the trades, that does last for a long period of time, right? So strategy. First thing, start on the daily, identify the trend. We identify the trend via trend lines, right? So once the market stay above your line, you're essentially looking for the particular trade, whether it be buys or sells, right? So ideally we start in here. Now the trend lines, that's one, keep you in a trade because you know that the market going in a particular direction, and it does also give you additional points of entry because you know we also everybody knows supply and demand, support and resistance, but then we just kind of ignore trend lines sometimes as places that we could potentially take trades off of, right? So also, especially daily, what I would also give to you is potential points that you may not see that the market can react from, right? As I always say, sometimes you're trading and you get a big move and you never know where it come from. Or you didn't see it happen is because you hit a major trend line without knowing it, right? On the same daily, we would also look for support and resistance levels. So one, for before I continue, the trend lines is any way that the market touch 2 times or more, right? That's considered a valid trend line. So right here, these two touches alone will be considered a trend line, right? But so this considered as 2, this will be 3, this will be 4 touches at the market, right? So we can consider it to be a valid trend line. I rejoined it at first. The trend line was actually um, here, right? And well, it break the structure, we get this little dip, whatever, right? But we rejoin it based on where the market at now. Now, when you're joining support and the resistance, supply and demand is the same thing. We go into the wick at the highest point we reach, right, which will be here, and we also go into the body of that same candle. So that's where you would get your resistance zone from, right? So that is how you're going to draw your support and your resistance on top here. Now, this is a weird place to be in terms of drawing resistance. Now, really and truly, right? Your resistance supposed to be like here, right? This is really where your resistance supposed to be. Huh? Now, this trading range here kind of weird. It's an odd place or odd um place to draw your support and resistance, right? Because this obviously looking odd. Now, for this specific case, because we get this big impulsive move here, we would use the place that the market break from to draw resistance, which would be down here, right? This was the last place that the market was as a solid or a validated um, resistance and support zone, right? So this here was resistance all the time. This was all-time highs up until Friday when the market break, and then now it potentially could become support, right? So previous resistance to the current support, that is how you know a valid level. So our trading strategy is based on identifying these levels and taking trades off of them. Now, especially higher time frame, like we own on the daily, that's considered as a high time frame and like a major level, right? Most times just be frightened to take trades off of here because time we pull we stop loss, it has always been too big and we've been intimidated by moves like these. However, these are the zones or the levels that we should or must use to identify where institutions buying. The banks and them not coming on only 1 minute to get no sniper entry. I have billions of dollars, bro. I fill in orders. I peep in the daily. That's good enough for me, right? I could pull my stop loss quite down here if necessary. You know? I have the leverage to hold those trades. Now, once again, so we keep going for the same thing, right? Candles are moved by money, right? So this whole thing we're looking at here, trading is just money, right? So remember, trading don't add any value to the world really. It's on the products in trading. It don't make nobody's life better. It will arguably make your life worse if it is you don't know how to use it, right? It don't provide no services. It don't cure no diseases. It doesn't do anything, right? It's just pure greed. When you come on trading, the only thing you're looking for is money, right? So it's a greedy place. So trading itself, right, is just human fear and greed plotted on a chart. It's a visual representation of what's happening in the world, what happening with a particular stock or asset. It's just what we doing as people, right? If everybody frightened and with the sudden stocks, we would see it visually represented here. If the world in a little panic and we're not sure what's happening with the geopolitics and whatever, the visual representation is gold buying. Right? So that is what we're looking at. We're looking at people and how they feel about things. Right? the numbers on this side that we are accustomed to see, I cannot take off I like my chart as clean as possible. But the numbers on this side here is prices. Every time you move this arrow here and you see a number, is a price of something. That is how much something costs. Right? So keep that in mind when it is we're looking for trades. What we looking to do is get a good price. So the entry point that we're looking at, right? We're looking for a proper entry, sniper entry, this and that. What we is essentially looking for is to buy something at a good price or sell something at a good price. If you have something for sale, you want to get the most amount of money for it. And if you're looking to buy something, you want the best value for the thing you're trying to buy, right? So that's all we're looking for in the market. Trading is not an income tool, it is an investment tool, right? So we have to look at it and think about it as such, right? So we're looking at getting a good price to buy something potentially to increase wealth, right? Not really to pay bills like how we just be looking at it now, right? So if you change your mindset to it, the whole trading concept will be different, right? Look at it as a fun thing, in and out, whenever now. I don't apply too much pressure to it, but I digress. So how we just take the trade, or how we just identify what is a good price for something. So if you buy something for a low price, you want it to essentially appreciate, right? Because as I say, we're looking at investment. So ideally, what this is to buy things to hold, right? The institutions don't buy some gold for 20 pips and then sell it. They just buy things and they just hold on to it, and I mean long gold for months now. So that is how it is supposed to be used essentially, right? Let's identify good prices that we could buy stuff at. Now, because we understand that volume does move these candles, because none of us on this call, everybody in Trinidad probably could move a candle like this. Almost certain. This is billions of dollars went into this. When we see candles like these that break zones and hold above the zones, that is institutions. So this is how we identify banks and big money men, right? Because say this, trade with them fellas and thing, right? So this is how we identify them. We identify them by big candles breaking major zones. A major zone is, I would say 4 hours daily, anything up the road from there, right? Even maybe hours and thing, right? But there we go with the daily. For daily is for certain, and know somebody put plenty money behind this. So if they buying, then we should buy too, right? Because we don't really know what's going on, and we're just looking for little indications of what they're doing, and then we will just follow to suit. So once we could identify that, a bank or something buy, we could then potentially find entries. The
By
next,
just me, but
huh?
And I heard you audio bun.
Now here, me
We hear
yeah,
you
we
now.
know you again.
Okay, cool. Right. So,
What happened there?
so what we're looking for is to be able to identify and find the potential entry point. So the first thing that we just do is when we see a major level, because we will do some examples. So like on the daily here, what we will look for is identify major levels. Right? Everybody know how to draw support and resistance on this code. So this is not something that we had to go over, right? But we know where to identify them. What we would look to do then is validate these levels to make sure that these levels are strong levels. So remember, if we zoom out, we had to understand how the market does move, right? So this here now is where we're looking at playing the game, right? So we could keep doing this over and over again, right? The market does move one way. Nothing new happened. So we quiet down here. This is the beginning of this year. This is the 6th of January this year, right? So what we doing here wasn't invented by us. It's not something we now learn and we crack the code. It's happening. The market has break zones, pull back to the zone, push and break the zone, pull back to the zone, push and break the zone, pull back to the zone. Any pair you go on, anywhere on trading view, this is how the market does move once we can identify the direction that it's heading to. Over and over again. Sometimes we get a major push like this, right? But generally the market does go up and down. It push here, it come back, so it does go, right? So this is just logical thinking. There's not even, nothing fancy, no special, nothing. That's common sense. We can easily identify what does constantly happen, right? So There's nothing special. That's common sense. You can see that the market always doing that. Anyway, you go on YouTube and you're doing a beginner trading course, there's always come and do this for you. Right? They always join this. I'm sure they're fed up see somebody make one of these to show you support and resistance and uptrends and downtrends, right? So we know what that is. This is what it does look like. So because we rational thinking people and the market does always leave patterns, we would look to do the exact same thing. Once the market push, right, money going up, it rally up, it have to correct itself. So what it does do is give people the opportunity to get back in to get a decent price. So if the market going up, it wouldn't go lower, right? Common sense again. It really easy. If the market going up, it wouldn't come down. So as we identify the potential pushes and pullbacks, we know the market going up because once it go up, it do come back down, right? So if we correct, the market go down, just go up. So what we would anticipate is after the market break a zone and it close above. So the key thing here is closing above the zone. Now many times we will see the market push impulsively, right? So you get a big on a 5 minute, a 1 minute, whatever. Even a 50 minute, 'cause that's the most that way you get the worst. Market push quick and rethink the market going and continue going up. Right? But then surely enough, after it push, it is just come back down. Right? So we get fake out. Right? We get wick. Whoop, and then it come back down and it trap you in a long. The market designed to take your money and it know how you're trade. It know how you're emotional. Right? Human fear and greed plotted on a chart. My partner recently told me the market alive. I honestly believe that this thing is an algorithm that designed for you. I think when you enter a trade, there's no way your stop losses and it just go to that. Right? And as we touched last week, the market is go towards liquidity. My partner, and I think that we said, yeah, right? She right there, right?
Yeah, yeah.
Right. So we identify that on Bitcoin. But every today or yesterday, it just go to your stop loss. It just know where your money is. It go directly to it, take it, and go in the direction you always believe it would go. So that is what the market engineer to do. Go towards liquidity. Liquidity is where your stop loss is. Right? There are people who stop loss here because they think the gold price would go down. So people stop loss here. And then it have people who stop loss would be below here. So they stop loss. That people stop loss could be here. Right? Stop loss is just where everybody says put their trade. Right? Below the lows. Everybody says put the stop loss in the same place. Right? Above the high, below the low. Right? So we have it obvious. So the market engineer to go towards pools of money where the market is, right? Because think about it, all of we here trade already, the market just seem to go to your stop loss, take it, and then go in the next direction. It almost programmed the engineer to do so, right? I honestly believe that what has been happening. So as a smart trader, what we just do is identify how the market does move. So we know when the market break above a zone, chances are most times it has pulled back to the zone. So what we would do is wait for the market to pull back to the particular zone in question that we're looking at. For instance, here. So, well, I know what happening, right? But I still waiting to see. Only one presented with new evidence will I change my mind. I still expected the market to come back here and validate the zone. Because common sense, as you see before, it don't do nothing new. It just push and then it just come back. What it does do when it comes back, as I say, is give you a fair price to buy before continuing higher or where we expect it to go. Right? Like so. Or it could break the low, we don't know. You'll get into that. Right? We never know what happens with the market. So because we know the market is push and pull, we would wait for the market to push, do what it had to do, confirm the zone, which is a close above, because remember, we just get wick out if we don't wait, and then we wait for the market to come back to make sure this zone good. We would buy from the lowest area possible. You don't want to buy at a high price. Right? Why would buy something at the most expensive it is? You want to buy something at the lowest price. The lowest price you would get gold to buy at currently, if it was to, give us the move we anticipate, could be around this area here, the 29 area, 2900 area. Anywhere around here, it could even pull back to lower, right? Now, to confirm that it may come back down, we will use something called the Fibonacci. Fibonacci is a mathematical tool. I can't remember who designed it, but pretty much everything in the world is numbers, right? Maths is everywhere. Everything engineered, the world engineered, right? Nothing happen chance. Some of the most odd things in the world serve on a particular purpose that have dimensions to them. So trading is no different. So what we will do is pull out the Fibonacci tool from the place that the market break structure from. Right? The market break structure from this area. This was the next support or resistance area that we had, right? So this could be your previous structure. Right? This here is your structure. So the market break the zone from here. Right? So from here, these candles was one continuous push going forward, right? So this is where you will start to pull your fib from, wherever the market break structure from. So here, up to where the market rejected from, which should be here, right? Wonderful. So we go in based on here. Anybody know where the golden zone is? Where we just look for trades from? Who was here before?
That would be the sky blue line.
What number is that?
I
No,
can't see, but it's on my phone.
7%.
261.8
61%.
The 61? Somebody?
Right.
Oh,
So
this 2
61 and 78. That is the golden zones. That is where we get deep enough retracement to then take buys from. Right? So the 61% area lining up with the trend line here. Which if you think about it, if the market touch our trend line, which is our entry point, right? Trend line. So we know the trend line valid, right? Because we holding this trend line here since pretty much the 30th of December, right? Last year. So you're using this trend line as being a valid point of interest. Notice the market lining up with this 61% area. Like maths. Ooh. Right? Fancy thing. So if the market could possibly come back around this area, is where we could potentially get a good trade from to then push off. This also lines up with support area here, right? Where the market broke from. So the market never actually tested this area or validated this area previously, right? We just break out of the zone and we never come back here. So it could come back here to test the zone. It could come back here, test the trend line, or mathematically it tests that the 61% area. And here it also test and it also test or validate it.
I was could be item now, but it's after question. The yellow line there, that is 79, right?
The yellow line
The
is
yellow one.
38.
Oh, it's 38.
Now it's 38,
I got
right?
it
But the
check.
golden zones, to how it is really use the Feb. So you can use the Feb at each level. The strongest areas will be the 61 and 78, right?
Yeah, alright.
Cool. So the 38 area, if you notice, also lines up with this support and resistance zone potentially, right? So we just pull it randomly and we could see that it also acting as support and resistance. So this here could be an entry point. Now, I want to do a whole thing on fibs, but generally how you would use it is that you would average it into the trade. Right? We didn't do too much about it, but all I hear me say it before. So you would break up your entry. That's how sometimes smartly, intelligently, they will see people with multiple trades. Right? So you could take a potentially small trade here. Remember, it's an investment tool, it's an income tool, right? You can't make all the money you need on one trade. That's what we just always try to do. We always doing the same thing. We always lost any money. Stop doing whatever you was doing before. Don't do it anymore, right? Because it's not serving any purpose. You don't win. Whatever you don't know, because you don't win, right? So what you know, invalid, forget it. Averaging to your trade small. So you come and you take a small entry, 20 just in case the market pull back and push off, because we don't know. If it come down on you again, which is this resistance zone here, you could potentially take an entry. For me, if you keep pulling down, you keep averaging. I wouldn't go below the 78 by this point in time. All these trades should add up to your 1 or 2% risk. You're taking them small. If you're correct, they trade from down here would clear all of these and they make nice money. Right? If not, you could be able to hold the Jordan coming here, and by the time you lost, even if you lost 5 entries, you're still, below your risk or at your risk now. So any one trade, so I try not to lose more money than I could make on one trade. So if you're trading and you reach, let me say on average, you could make $20 on a trade. If you're in a drawdown and you reach $20, whether or not you think the trade will go in your direction, close the trade. Because if you're wrong and you lose 50, it would then take you more trades to end up in profit. Something that you can't or you're not able to do. So trying to know as much as you want to win, try your best not to lose either. Right? Because when you lose, it's hard to build back up. You almost never build back up. But if it is a manage your risk enough, right? Because you need all three, right? You need discipline, you need proper risk management, and you need a little skill in here to be able to take your trades. If them thing not lining up, if anything out of work, any one, you're dead. And so trying to lose too much, so you average into the trade. Though let's take one big trade here because you feel the market going in that direction. Most times you just be wrong, you're going to lose, you lose too much, and then eventually just scrap your whole account. Oh yeah, that's deposit again and start over from scratch and but have a new account, so things will be different, and then you do the same thing, and then before you know it, you have 5 or 6 accounts that in the red. Right? Take your time, manage your risk. So what we would anticipate is the market to come back here, validate the zone, and then take the entry. But once again, for the people who was here, when the market come down to our level of entry, a key level, what we would then look for to take our entry? What we're looking at key points of interest here. What we just look for.
Doji.
Besides that,
Bullish engulfing.
that is one.
The break
And I
and
say
a
we're gonna
retest
stick
in
with
the
bullish
zone.
engulfing.
Break and retest, yes, but this is a break and retest here. So it break a level and it retest an area. But on the retest, what we
Uh-huh.
just look for to take the entry. What is the trading strategy we doing since we start here?
Looking for the lower highs, the new lower high.
Mm. So what are let's identify to take trades on what we learning here since we started.
There was break and retest.
Right. So this is the break. We're waiting for the retest. After we get the
Correct.
Uh-huh.
retest at a key level, what we just look for at the key level. Don't do my hand now, boy.
Engulfing.
Question. Relative to the bullish engulfing, is this the candle look for? Or is the pattern
Ah, the
look for?
pattern, boy.
Yeah, pin
I'll go on
pattern.
that
Oh
side. The bullish engulfing
God.
pattern look for.
I the whole strategy. Oh God, that is what we just identify. So when the market pull back to the zone, right, we anticipate the market to come back here. What we then do is come down to the 15 minute and identify the trading pattern that we just use to take entries on, right? Which is, let me see if we find one. This thing here. So the market would sell off, right? The market would sell. It will come down here. So we could put so I'm looking at a shorter, but I don't sell what I would surely while looking at a short potentially. Right? But let me just anticipate or see that we get the move. The market would sell off. And then in addition to all those things that they call, right? The sell off, the bullish engulfing, we would then wait for it to break a 15-minute high. So when the market come and it break the high and it retest that high, then we will take an entry. This is the whole trading strategy. What we're looking for,
I could repeat that.
right? So what we're looking for is the chart pattern that I showed earlier at a point of interest. So remember, we fundamentally we're looking for the market to come and validate this level, right? If we feel the market go pull back, and sell off until here to make sure this level strong, right? It may not do it, we don't know, but we anticipating that it does. When the market does sell off, I'm looking for a sell trade, but before that, remember, is when you buy for the most part, because we fundamentally bullish on gold. We buy in the market, right? The market going up since whenever, right? Because we're looking for highs in the market and the market selling off, right? What we will be looking for is anywhere close to our key level to see this thing. So this thing could form here, it could form here, it could form down here, it could form anywhere, right? What we're looking for is to see this close to here. Once we get this will be the confirmation to continue higher because this is a change of character. So remember how we just use it. Let me say for this little period of time here. Alright, so when we could see the market clearly sell on. This is a 15-minute time frame, right? So each candle is 50 minutes long. So there's a couple hours here of sell, right? And then out of nowhere, we get this bullish candle. So we get lower highs all the time. No candle was able to break the high, the one previous stage, right? So this candle and this candle wasn't higher than this one. This one was never higher than this one. This one was never higher than this one, right? So the market clearly going down, right? So we can easily identify the market selling because no candle, no subsequent candle was higher than the previous, right? So the candle that formed after it didn't break the high, right? And out of nowhere, we get this candle that break all these highs. So this bullish engulfing is the first sign that the market going and change. Money do this, volume do this, sentiment change, right? After we get this candle and it break the neckline, which is the previous high, the market break from here, what we would then look for is a pullback. So we're looking for the market now to maintain this high. So we get the lower lows all the time, and then we come and we start to get higher highs now. Once we mark, so let me get even cleaner. I want to show you. Right, so this was the example, right? Good. So the market selling, right? Market selling. So we getting lower lows constantly, right? Each low lower than the previous low. Everybody seeing this?
Yeah.
All right. So each low lower. So the market going down, right? This low lower than this low lower than this low. So we could easily identify the market going down. Because every time it push, it breaking the level and coming down. Breaking level and coming down. Right? Cool. We reached a point of interest. So the point of interest will be a trend line. A point of interest is a zone. A support zone, a resistance zone, a trend line, wherever. Right? So a point of interest that we could potentially look for, trade on. Now when we reach down to this zone, so remember all the candles coming down. We getting big red coming down the road. And then we come and we get a bullish engulfing candle, a big green. Right? In no way, this is the 1 hour chart. So each candle is 1 hour long. Right? In all these hours here in this little market, right, we never get a big green candle like this. No way here. Right? So we could easily sit down and watch this market sell. This is what I usually do. I would sit down and watch all these sells happening. Right? Because I would show all the why it is I just wait for sells to pass, right? Especially on gold. So we gain all these sells, selling off, right? Let's see. Nice. All of them is same color. Right, so this is red, this is green. Right. Cool. So the market selling off, right? So we gain with nice sells. Out of nowhere, we come and we get this big green candle here. Right? So after all these hours of sells, this is the first big green candle. This big green candle here was formed at a major level, a point of interesting point, a point of interest, right? Support, resistance, trend line, entry point, a key level, right? So we come and we get this bullish engulfing. So this is the first indicator that the market might change, right? Nowhere before we get a big green candle like this. So we could see that the sentiment changed. What we would then wait for is the market to break the neckline. The neckline is the previous high, which could be here, right? This could be the neckline here. So we wait for the market to break the neckline. And then when the market break the neckline, what we do is confirm that this neckline here is indeed a strong zone. So this is the break and retest, right? So this candle come, it break the zone, and then it pull back, and then it reject. Right? So once you get a wick, you get some rejection. That is what that's our indicator to say that the market will go higher. So then now, if you notice, the highs after it keep going up. So every high, then on, keep making new highs. So now the market change. So this is a character change, right? So what we're looking to identify is when the market turn around. So the market sell all the time. So we could even come down to the 15, you would see it better because it's the 15 minutes where we just look for the entry points from, right? So you would see it even cleaner. Right? Nice. So the market selling all the time, right? Coming down the road, we getting lower lows, and then the market shift there, right? We start to get like this big bullish engulfing, and then the subsequent high is higher than this high. Are they can see that? Yeah, make sense? Right? This high
Yeah, man.
higher than this high. So now we can identify the market shift. But what we would do is wait to confirm that this previous high broken here, right? So we would wait for the market to trade up into the zone and close above the zone here. So if we could find another example, and before we push on. So this trading strategy here is what we're looking at, right? So we're looking for a point of interest. Now we say anyway here, right? We get a little pullback, market sell. See if I could make sure and keep the zone here. Alright, so we're looking for a trade and a point of interest, right? Right, it's not the best one, but market sell off. Nah, that's not the best one, yeah. This one will be a little bit better, yeah. Not really. You get the bullish engulfing. Find a nice one. This is one, but alright, I'll use this one here. So the market sell, alright. Oh, we get printing red candles. Selling. And then we get bullish engulfing. Now ideally what we're looking for is this to happen at a key level, something that we identified prior, right? So we're looking from beforehand to possibly look for something like this close to, where we have a resistance or support. So the market selling, we get a bullish engulfing, which is the first indication of, looking for a possible entry. So if you could notice, we have this is called internal liquidity. So we have a little area here that the market break from. Right? Cool. So the market sell, we print this candle. What we're looking for, right? Because remember, we come in this low here. This low. Lower than this low. Right? So the market coming down the road all the time. Right? Selling off. Right? So in a seller's market at this point in time. Market trending down. Right? Then when you reach a point of interest, so imagine we had a support level here. That's vision in your head. We had a support level. What would then happen is that we get the bullish engulfing, we first signal. But what we will do is wait for the market to break this neckline here. This little area here. This area is where the market cannot break this area from, right? So we come back up to the previous side. So we trade it back into the zone. So on here we waiting. So sometimes when I say, I say, well, but take an aggressive entry. Aggressive entry would be I'll see the market trade back up into the zone and I expect it to continue higher, right? Just based on the momentum. So I see this at a key level. Most times, more often than not, this will continue higher because the bullish engulfing is a sign that the market going and change direction, right? So then we might take an entry somewhere here, we'll chop around and let's get a lower entry. But what we would then wait for, once we identify that area or that zone, is wait for the market to once again break it with a bullish engulfing and close. This all is happening 50-minute close to your area. Wait for it to break and make a nice bullish engulfing and close, and then pull back and close above. So now we can confirm that we're getting higher highs. So by the time we take the entry, which is safely, we already made a couple higher highs. Right? The market already showing you that it's going up. Because remember, if the market going and continue selling, this would not form. It would have break this low and continue lower. Because that is what a seller's market does do. It is keep making new lows. So it'll push down, pull back here, and then it'll push down and pull back here and push down. Right? So we know the market is selling once it's making new lows. Right? So it would have come, would have do this, would have break the low, would have pull back to here, would have break the low, would have pull back to here, would have break the low. Right? And we know we're going downhill. So we can identify that. But once that change, that stop happening, we can then identify that we're going up because we're making new highs. Right? So once you see new highs making market change, it might not always look as clean to you, but once you see it making new highs, it form new highs. And not necessarily only 1 minute and thing, like on a 50-minute, they making new highs. So we come, we get the bullish, markets are chop around, so we get a pullback, and then the pullback now didn't make a new low. So that is how we sometimes I will say take aggressive entry. Right? And then you just wait for this neckline to be broken with the next bullish engulfing and close above. So now you get ultimately a new high altogether. And then you can take the market upwards. So this here, this little chart pattern, right? Look at next one here. But remember, we're looking for it at key levels, right? We gain selling, right? So this is your whole trading strategy here to be able to identify and use this. If you can't identify nor use this, then everything we learn in here essentially irrelevant. This is the edge that I found in the market to trade, right? And I'm teaching it earlier. So this here is what changing your trading career, identifying these or this thing here at a key level. If you can't, then you will have to find another edge now, right? Market selling off. Clearly seeing sells. Get bullish engulfing. Bullish engulfing break the neckline. Close above. It pull back in. Made a new high and we continue higher. We try to go for a 2-to-1. Now the reason why we're looking for that key levels is so that we could get nice pushing. Now we just come and make a double top here. We have to get too technical. Make a double top, sell off, whatever, right? But that's irrelevant. But essentially, we're supposed to get like a 2-to-1. Let me see if we get a. We get a 2-to-1. So we always going for at least a 2-to-1, right? Short together, at least. So that is what we're looking for. So back to where we at now in terms of trading, right? What we're looking for, because we already mark up, is identify that pattern somewhere here. Right? Now what we could see is that the market make the bullish engulfing, nice. So that's the first indication of the break, and we're looking for the pullback, right? So we see we have some dojis here which suggesting selling pressure. We also relatively high on the RSI, right? So the RSI now could correct itself back to this level. So remember, it was going up and down, up and down, up and down. So we could anticipate the RSI now to come back to this level, validated, which is this zone. And then we're looking for that chart pattern on the 15-minute somewhere here. So if we zoom in to the zone, we would see that we have space and time. We have space and time for that to happen. So all this could sell off, and then anywhere around here, after all these sellers get taken out, we could then come and look for entry. So we could get entry anywhere around here, we could get here, we could get here, we don't know, right? But wherever we get that pattern, anywhere near these zones, potentially for the sell-off, is then we would take the entry to continue higher. Because then now, on the higher time frame, the market only, so it might look like it might sell off here, it might sell off for hours, right? It might sell off for hours. But we anticipated more buys because the structure showing us that the market going up. It's clearly buying, right? We know we got bullish engulfing. We know what that is do. So the market will just correct itself, right? We gain some weakness at the market now. It could continue pushing up. I don't know, right? I hope it doesn't. I really hope it pull back, right? But if it push up and it break this high, then I would surely like we're looking for entries in terms of that, because we taking buys ourselves dependent on what happened, right? But once the market pull, because we know we're looking for buys, once the market pull, it could come here and retest, it could come down to the trend line and retest. Either way, we taking the entry. What we would then look for is our chart pattern, which is this thing here. Market sell off, get bullish engulfing, break a neckline, and then we will take an entry. And hopefully we could be able to hold our entry to create new highs. So that is what we're looking for, right? So what I urge you to do, right, is practice at the back test. So you have to come and go on the chart and look and look and look and see if you can identify. Just look for it. Right? That's all you have to do. Just look for it and see what happens after. So trading is a practical skill. So you have to, practice it now. Anybody don't understand what's going on or unclear or have any questions about what we now do?
If you get us make a little note form in the sequence of conferences, no?
Sequence. No problem.
Just for the sequence of conferences, just generally, so it will be easier for everybody to identify.
Okay. No problem. Right. So sequence. See, I was supposed to make it. I would really try and write it down for you. So this is exactly the sequence. Once the market break a resistance, so we're going with buys for right now, right? Once the market break a resistance, the first thing you're looking for is for the market, so we could write it down. You're looking for the market to break the zone with a bullish engulfing. The bullish engulfing needs to close above the structure it now break. So if it don't close, it's not valid. So you have to break it and you have to wait for the market to close, or the candle to close above the zone. That would suggest that the market have volume and it's strong. Your second confluence is the market to pull back to the zone and close above it. So then you're waiting for this to come and close above it, right? So when it pull back, you want to get wicks on top here. You don't want this to push through and close below. So you're always waiting for the close of a candle. So that is why I think that someday we'll sit down and we wait on our trade and we wait for the candles to close. Because sometime in the last minute, from experience, they would see that the candle just do a mad thing and go in the next direction, right? So wait. You're waiting for the candle to close above a zone, and then once the candle close above a zone, you can either one, based on your confidence, take an aggressive entry, or you could wait for the market to then create the chart pattern, which is something like this, and then take a next entry. So you wait for it to come down, close, and then wait for it to push up and break the previous high. So let me say this is let me imagine this area here happen on top here, right? So forget this. So the market break and we're looking for the pullback, right? So wherever. So the market do this, pull back. So imagine this here is the pullback here, right? So the market pull back. What you could do if again like the dojis or again wicks on top here, you could take an aggressive entry if you want. Right? I don't recommend doing it, but you can. You can take an aggressive entry and pull like your stop loss below that previous low day, something like this, right? And then take an entry and then hold to see if you get the move above, right? Or for safety, which is most likely what would make you win the trade, is you could wait for the market to sell and then break the neckline. The neckline is the previous high. So we're looking for that previous high on our 15-minute, right? Break this neckline here. Right. And when it break this neckline, you're looking for a bullish engulfing. So remember this happened on a lower time frame, now the 50-minute. Bullish engulfing, and then the next retest to close above. So you're waiting for it to sell. You're waiting to get a bullish engulfing. So you're looking for this in here. Bullish engulfing. Break the zone with a next bullish engulfing, which will be here. And then that subsequent candle, the next one you want that to close above. And then when you get the next close above, you validate that this area is a strong area. You would also confirm that the market making new highs. And then you can take an entry. Ideally, you want to put a stop loss below here. And then you can hold that trade from 2 to 1. Make sense?
Alright, so just normal. Reach we break the previous side slash neckline.
Right.
Right, so when I break the previous side slash neckline, I come back down, form a bullish engulfing, and there's where you're taking the trade.
Right. So when it break the previous high, you're breaking the high with a bullish engulfing. So we only 15-minute, right? So bullish engulfing, 15-minute above the neckline, and then the next 15-minute you kind of have to close around the neckline or above the zone, and then you enter. Confusion? Still engaged?
It's not confusing, but I feel that demonstration if you can utilize it on, you see which part the price at, if you can utilize it using some like arrows, some drawings on the screen, I feel like I understand it better.
So, right here.
Which part the price is? Which part the price
current price
Let's
here?
use the arrows and I should understand it.
Current price here?
Yeah, with the current prices, if you use the arrow, meaning that it come back down.
Okay.
So the level we are there and then it go above, I feel I would understand it. Just identify which part the bullish engulfing patterns will be.
Okay. So you do it from in this area. I just want to make sure.
Yeah, from that area. Yeah.
Okay.
That's hypothetically drawing it up.
Okay. So this here is a pullback. I'm gonna make a small arrow.
That is it.
Alright. So the pullback.
Anybody? So I'll catch up with you. Yeah?
Yeah.
Alright, cool.
know what to do here to make this make more sense.
Malo, you could also do that same arrow thing on the same where it actually happened, so you could see
Wait, happened. Let
where
me.
it happened.
I'll do it now. I'll do
Yeah.
it.
So you could no, you could leave that there.
And do a next one.
So he could have like a yeah, like so like he could understand the foreseeing part of what to expect, and then it could show him how it actually happened, so he could see the similarity.
Yeah. No scene. About that and with bullish and girlfriend. And I was still gonna make over one of this and PowerPoint or something dog.
Yeah, bro, you can notice yourself there. You can just go through it and I go identify the points. So let's see where it is now.
Right.
If you just move slow enough, it
Yeah,
should be
I did
manageable.
last one yet. I was the last one though. I need to take it. I can't put all this in dog. Yeah.
Oh, wicked man, yes, we can tell the man done and
You
then
know, type of way
And I know man, that's not meticulous man now. But I realize like he fighting up that.
I just want to think dog.
Yeah,
I ain't digging all this dog. Oh, wow. You a gay though. You have to get it. It's fine. But even with all of this, bro, you had a back test this though. Right? Had a back test this though. So the market pullback, you're looking for rejection at this zone. You're looking for this chart pattern here. Right? Which let me see if you find it. This chart pattern here. So your pullback is this, which is this. Right? So this here, this pullback here you're looking for. So all the candles that kind of coming down, selling off. You're looking for the selling pressure. Following me? You there, bro?
Yeah, I follow you.
Right.
Yeah, I follow you. Yeah,
Right. So you're looking for the market to sell. So you need it to sell off. So you're looking at market selling off. It could look like this. It could look like this. It could look like anything. But you're looking like a sell. Right? You're waiting for the market to sell. When it reach a point of entry, which is like this support area here, which is similar to how we have the trend line here, where you're then looking for is the market to start to reject around the zone. So it's like how we come here and we got some wicks and we got like this doji candle. You're looking for the market to reject at this area here. Following me?
yeah, okay.
Right. What you would then look for is for the market to push up with a bullish engulfing above the neckline. So what we're looking for then is essentially, so I remove this box. So what we're looking for is a bullish engulfing above the neckline. So the neckline is the previous line, which will be identified by this candle here. See me?
Yeah.
Who's this talking to here, bro?
Meng, man, Meng.
Oh, okay.
Your mic, boy. When you answer, mute your mic.
Right. So you're with me. So you're looking for this so you're looking to get a bullish engulfing above your neckline. With me? This is gonna be a neckline here.
Yeah.
Right. The next candle, which is a 15-minute candle. So this whole thing is you're looking for this on a 15-minute chart. Your next candle, you're looking for it to reject above the neckline. So you're looking for it to reject here, here. So it would be this red candle here. So you see this 15-minute candle close above this zone here.
Yeah.
Right. When you get this close, you have two options. You could enter. Well, not really two options. This is your entry point here. Quite actually. Alright, so this is where you would enter. And the stop loss will be below the low. So you enter here. So you have two stop losses. You could either put an aggressive tight stop loss here. Now notice, although we get this rejection here, this market still come and kind of push down, right? So it don't ever be perfect. So what you essentially want to do, this is why I encourage any prop firms, is to be able to put your stop loss here, right, below this low. If the market come and break this low, you're wrong. That means the market selling off still, right? So no problem. It's okay to be wrong. And then you put your target at a minimum 2-to-1, bare minimum. So this is your trading setup. Yeah.
Good.
You got it?
Yeah, yeah. I got you there.
So this year,
Hello? Yes.
this year, so this is recorded, so you'll access it after, so you go back and watch it over. This here is the basis of the entire trading strategy, hinged on identifying this thing here, this little area. All the trades I taken, all the trades I am sending, dependent on identifying this thing here at a key level. So what you had to do, which everybody should be doing, is looking for this. So this could work on anything. The only thing I see do work on is NAS and USDT. But other than that, everything else I see this. So you want to be able to identify this. What this is, right, is a change of character. What we're looking for is to powerfully and with a surety identify when the market change in direction. So the setup is basically a break and retest strategy, but a change of character. So the break and retest is to identify institutional levels. So that we're looking for the break, right? And then what we're looking for is to confirm the continuation of it. right? Or when the market ready to buy. So if we're in a buyer's market and we get a pullback, which will be a sell, what we will want to do is identify when the sell is over and take a trade when we know the sell. It's not no more selling pressure. Because sometimes we will take a trade, we will enter. Like we say, looking for a sell, and then the market will just continue buying. We're looking for a buy, and then the market continues selling. So that means it's not ready yet. Right? It's not ready to get what you're looking for. So you know you're looking for. So like it's like this. Yeah, let me say you're trading, right? And you identify the trend line. So you identify the trend line as a place that they could possibly take an entry off of. Right? So you identify this area here. Now, if you come down to, I don't want to move because it will throw it off, but if you come down to, because we're on the 4 hour right now, if we come down to this area here, you would know, this here would be a very choppy area. We'll do it. This one is actually real clean. This one happened real smooth. Okay, so now we're still going to get the example. Right. That's good. So the market come and it sell off. Right? So we get the selling of the market here. Sometimes, well, this one clean. Well, sometimes what would happen is that we will take an entry too fast, right? And then sometimes the market might wick through this area here and take you out of them kind of thing. So what this pattern here does identify is the proper place to take an entry. So we could look at this here, for example, now, but this one here, it is actually good, right? Here it's good to see when the market actually break. Because the market sell, you get the bullish engulfing, right? This here will be considered as the neckline, anyway up here, right? This here could be a neckline. Now, because it didn't break the neckline, right? Now, this is something when I say take aggressive entry, because we look for a little pullback here, and then the market sell out, you hold more drawdown, right? So this be a risk. But here might be confirming the break. When the market sell and it break the neckline, you're looking for a bullish engulfing above the neckline, right? So what we're looking for is identify when the market change for sure. So we're expecting the buys because we're looking for a buy from here. But where is the best entry point? Now you would think the best entry point is down here, and you get a nice little push, and then you get a pullback. Chances are if you stay in the trade, you're not going to hold it because it's going to look like you're going to take you out, unless you really leave your stops here and your higher belly. But what sense it make to have to get all this profit and then hold it, pull back through all our drawdown, right? So the reason why we're looking for it to close. So this is a good example. There's a neckline here, right? This is a neckline here. Could be all here. We pay this, so right. This here would have been a candle that break the zone and it wick down, right? This here will be a nice bullish engulfing. This candle will have closed above, right? So stay with me. This candle will have closed above, and then if it didn't wait, then you'll enter and then you hold all the drawdown. You get trapping along. So when the first candle break with a bullish engulfing, so you have a big green candle, so you want to close full body essentially, right? But even if you get this, it's acceptable. We wait for the next candle to close above the zone. Notice the next candle didn't close above the zone and it sell off. All here would have been a full body candle at some point in time. You get wick out, we get wick out, we get wick out. That's when you're trading with FOMO, right? Now look at how powerful it is when you wait and you use your strategy properly. The market break the neckline with a bullish engulfing. The next candle close above the zone, and then what we get buys ever since, right? And all this happen at a key level, which is at the daily trend line. So we identify when the market come down here, and we use this pattern to identify when the market correctly and accurately change direction. Look how powerful that is. Look how much sells we endure. we come out sells we endure. I will sit down through all of this, right? Because I know what this does look like and where and how to identify it properly. Look, we get a potential of it here, right? We get a bullish engulfing. So everything have to line up, right? So let me say you see the market selling and then you come and you get this. This here could be considered as the neckline. Right? Market tap back in here, but it never close above. So market not ready. So it sell off. We get a bullish engulfing confluence 1. It come up to the necklines we anticipating buys, right? So kind of like confluence 2, but not really because we didn't close above. So this is the perfect example to show you how the strategy is and how to accurately use it now. So once you can identify this key chart pattern here at a important level, support, resistance, or trend line, this is how you use it. Yeah, you seen it there? See it better, you know? Everybody should be seeing this. Yeah? Somebody, anybody.
Yeah, that's a week.
Yeah, man, I watching.
Right, wonderful.
I watching, yeah.
In secondary school, there's big people there, money looking for, you looking to buy a house and land and yacht and
No way, I driving and watching now, way. So,
like madness you doing there and all though. So this here is the basis of the trading strategy. This is the whole thing. This one pattern here is what going to turn you profitable. This is what changed my whole thing. Seeing this, and it's just the repetition. And so we're looking for this to happen anywhere important. So remember, we're looking for this to happen at a key level: support, resistance, trend line. Market sell, get bullish engulfing, close above the zone. So it's really, so this is really it. So not this. So this here is a false breakout. So this here is this is why it's powerful to maintain all the stuff, right? All your confluences together and use each and every one of them properly. If you miss one, you're dead. Because if you miss, you get all here, right? You get all. You get a key level. You get bullish engulfing. Come to the neckline, first one break above, hold, and then the last confluence is the 50 next candle and the close above the zone. It didn't wait for that. So if you enter here, you get trapped and you're dead, right? So this one confluence, not waiting for your next candle to close, is what kind of what will make you lose. So this here is the perfect example, and the fake out for this, this is a fake out. This here is the proper way to use it. Same thing, bullish engulfing, come up, break above the zone, full body, we wait. Next candle close above, we hold the zone, and then we enter. So we could endure this little drawdown, that is minor, but we get the push, and we can look for this over and over and over again. Right? Let me see if we get one here. But I ain't really like them. I ain't really like them for these cells too much. Right, so this would be it here for these cells, right? So the market buying all the time, right? We get more big green candles, point of interest, and then we get some rejection. The first indicator would have been a big red candle. So we get the big red candle here, and it sell off, right? Wait for it to pull back, right? So we never know. This could have come all the way up here, and then it break the neckline again. Same thing, same 15-minute we on. Break the neckline. Right, but this one wasn't super clean because we didn't get the proper pullback though. Right, the proper pullback was supposed to be a candle right here. This would have been the entry and come down. So it's not the cleanest one, but it's a decent enough example of how it is work. This could be the 15-minute neckline at the break here. So the market pull back and then they come on and break and they close full body above it. This one they sell super hard, no problem, but essentially you're waiting for a pullback to then take a trade. Now, before I set up the strategy, I don't want to run it on too long because we're done 20 minutes past. And there's plenty of information, so I don't want it to be where we start to lose now, boy. And you get diminishing returns the more you sit down and taking this now. Right? Now, the reason why I don't short or I don't recommend short and gold especially is you see how it is the market constantly buying. Watch all these shorts, watch all these sells. Small cells. Sometimes none at all, little wicks. So to try to sell the market in this uptrend here is a losing game. John, this is going to take L's now. Right? Because your shorts don't last, you're more likely to catch a buy than a sell. Right? A decent buy now. Right? So even if you get a bad entry because the market in an uptrend, you might be lucky enough to get a bad entry somewhere here where these next candles just buy up. Right? Or you're lucky enough to get a bad entry here when these 3 candles just shoot up the road now. So you want to maintain the trend that you're in to get the best chances of getting the move you're looking for now. So somebody asks you, why don't just buy and sell the market? Because you don't know when the sells will stop. The sells in this buyer's market is short. So all sellers getting RIP'd in this chart now. Right? So that is why I don't sell the market, especially in this asset that I trade in here. I would just look for buys and let the sells pass, simply because we don't know when it will end. Right? And then look for the change of character and take the trade. Right? So as we see, we get in some dojis here. More than likely, the market weakening, we will get the pullback we're looking for, and then we would identify it. Right? So what I would do is when I see this happen as in real time, I would point it out to you all, and they will take a look at it to see exactly how it does work in real time when it happens, right? So to finish it up, let me line up the trade that we're looking for this week, and then take some questions, and then we go boss out. Right? I hope all of us at least demo the trades at the very least. Alright, so let me line back up what we're looking for here. Alright, so we're expecting these signs. The market weakening as a very good sign. I'm quite happy to see it, because once we get a big sell off, be bad. I would short this market here because of this fair value gap here. Right? Like something else we will touch, but this fair value gap is imbalance. Mute that man. Right. So we will touch on that, but fair values is basically pretty much when the market push too hard. Right. So it has created an area here where it didn't give sellers, it didn't give enough buyers a proper entry point, a good a chance to buy now. Come like let's eat all the food and going all the way now. So the market most times will come back to give buyers an opportunity to step in the market if they could now. Sellers, sorry. Right? They buy too hard, so the market will come. It's called the imbalance, fair value gap. That what kind of fancy name for it, right? It's just pretty much where the market didn't give everybody a fair shake now. So this candle, the wick at this candle and the wick at this candle never meet. And that's where identify. We will do it at a later date. That whole thing by itself. Right? Good. So we're looking for the market to come back down to the zone, no problem. How we would identify this sell, right? And the reason I'm looking for the short is because I expecting a big sell. So what we're looking at is a neckline. So I change the character. This here is a neckline. Right? Our neckline is pretty much a low. Right? That's pretty much what we're looking for. A low. I enjoy the box on this because for whatever reason I just get better with the line for shorts. Just wired weirdly like that. Whatever, doesn't change any color. So the market expecting it to sell off. What we're looking for is for the market to come. So this is we trade for the weekend that I'm looking at, right? To come, break the zone with a bullish engulfing, retest the zone, and then continue back to this area here. Right? So this is the trade we're looking at. Now we might get some resistance at this 200 moving average area. Reason being, the 200 moving average is this work as support and resistance also, right? So if you could see it line up with this zone here perfectly, right? So we could get some resistance here, no problem. However, we anticipating it to at least fill this next fair value gap here. Right, market by 200. Because I still don't want to watch the market break here live. I think some of you all see the market break this zone live. It was crazy. Right, it just move real, now real while now. Right. So we're looking for the market to come, break this zone here. I painted this low. The reason I painted down here to be conservative now. I like to win my trades. I don't like to take too much chances now. So I take the lower entry here. I could have even come quite down here. Right, when it done break this 200, so I leave it to flop around here. And then only when it break this 200, then take this little short here. Right, but we will take our chance on this one up here. Right. This is a 21 pip trade. It's a nice trade here if you could get all the way back down here. Right? So we're looking for the market to come, sell, right? Which I could do. We could do this. This is a head and shoulders pattern, right? Relatively equal highs. Once again, we go ahead again to all of them chart patterns. But this is a head and shoulders signifying a reversal trade. If you have belly, you could enter. You could enter anywhere close to here and pass up plus above here and short, right? But we're not going to do that. So we have one shoulder here, a head, and a next relatively high equal. So two relatively equal highs plus a little peak in the middle, head and shoulders, right? Good. Once the market break below, we will then, and we get a retest, we will then enter and then take this down here to this area. So this could be retrade, right? That I'm looking at. Or if not, the market could just do whatever and break this high. Once the market, or if it does break this high before, I would then look for more buys, and this could be entry. So what I was essentially waiting on is for the market to create structure. Create structure meaning create a trading zone, a trading range, create support and resistance. So we wanted to create an area that I don't want to pass kind of way. So we create a support, so we kind of have a support. If it tests it and come back down, that would be great. So to confirm that this is a stable high. And then you will come now, test the zone, and then see if it's a stable zone. This could come and blast right through here, we don't know. Right? Remember, we ain't get nothing in test the zone. So we get a big red candle and shoot through, right? Notice we getting plenty weakening on the candles. So we go get a sell. Candles getting small here, right? And it's looking like it's starting to trade a lot lower now. So we will get this sell, hopefully. Right? So that we're looking at this week here. So I'll set my alerts at the low here, right? And then you put alert on top. Right. Anybody have any questions? All right, so we go take it in. Something like everybody good to go. So during the week here, you'll see we catch, and until next week, God's willing. I tell you. So we out there.
All right. Thank you.
All right.
Good.